the previous class, we talked about different psychologies. I think that class was very extensive, over 1 hour class. And my understanding is that most people, they are having problem with their trading because they don't have a plan, or they have a plan and then they're not sticking to that plan. Especially if they start making small money, then they now feel like, oh, let me do more, let me do more. Then they'll start losing money. So, and we talked about the importance of having a trading journal, so that if something goes, sometimes things doesn't go as planned. So if something goes wrong, then one can easily just, you can write it down. Then you can now say, let me learn from this mistake, because it's of no use whereby someone is making a mistake and they are not learning from their mistake. The way you look at Forex is like a business. So it's like a business. So you need to be able to treat it that this thing is not, even if it's $10 you are trading, you trade that $10 like you are trading a business money. And in business, it's about percentage. So if you decide to say, out of my $10, I want to make 50 cents today, that is how much? That's about, is that not 5%?
Yeah.
Yeah, even that in terms of business, that's a very big amount of money. Even when the $10 looks like it's a small money, but realistically speaking, 5% is quite a lot, because like I've been saying, even banks, how many percentage are they allocating to people that save money with them? Maybe 5% in a whole year. So you just imagine in that world of where someone is blowing an account of, say, $10 in a day, that's 100% of that money is gone. So it's always good to treat it like a business. And discipline is also vital, because once you know that this is what I want to do, this trade, I'm risking this amount of money. If your plan is anytime I have 3 losses, I will stay away from market for 1 week. That is a plan on its own. Sometimes it's good to stick with that. I know it's tempting. Sometimes you feel like and market should be going your direction. But the market is controlled by a lot of factors. Like I was expecting us to have a very good trade yesterday, but what happened? We have a Bank of Japan and Japan Central Bank or something, another parastatal. They did not release the news at the same time. They're not even sure of what they want to do. So they're trying to make Japanese yen to be very powerful. But the news was not conclusive, and the currency was just flying up. Now, the danger for that is that when you now look at it, by the time BPJPY will drop, it will drop like wildfire. It will drop like wildfire. And when that happens, traders that are already trading the pair, they know that when this happens, let's just wait for the right moment and jump that train again and ride it all the way up, which is what is happening. Since I've been trading JPY, I have not seen this type of movement in a very long time. That we're having about 500 to 600 pips in a week. That is massive. And the problem is, if people are still buying and buying, if this market is going to drop, it will wipe out a lot of people's money. All the money that you have been saving up, it will wipe everything away. So the best thing is to keep tab on that discipline. The discipline is, if I make 5% this week, I will stay away from the market. Even in terms of experience, I discovered that when you're kind of say, somebody once said, if you make 20% of your account balance in a month, close your laptop. But we have people that scalp. Because they scalp, they can say they want to turn $1 to $1 million. That is their style of trading. But if you are somebody that you want to treat it like a business, not like you are just jumping into the market every time, you have to be very, very disciplined. And you need to have a plan in place. So what is your plan? This $50, in the next 6 months, I want to see how I can expand it, make some money from it. But the moment I lost 10% of this $50, I will not trade for the remaining week. I will wait for next week. So while you are waiting for that next week, what you are doing now is you are now revisiting all your trades. You're not checking trade 1, trade 2, trade 3, trade 4, trade 5. Oh, I made this mistake. Oh, I lost that one because there was a news in the market and I was not aware of. There was news for Euro yesterday. I did not expect that it will have that type of impact on the GJ pairs or the JPY pairs, but it had impact. Some people traded it. So if those are the things that the reason why you took a loss, that is still fine. So that's why it's good to have um, the trading journal. So you can write it down. I lost 3% of my account today. I was in profit for about 20 pips, and there was a news at 1:30. What is the lesson? The lesson now is when I'm taking my trade, I need to be aware of news. So all those things needs to be put in place. So you have the plan and you are sticking with your plan. And it is also good that you should learn how to take a break. And taking a break is important because when you look at what we do, it's more like we are using our brain. We have our emotions. We have everything that is involved. And it is not easy to be taking trade every day. Like I said last 2 weeks ago, I said, I don't like taking trades every day. If you take 1 or 2 trades in a week, and that trade is a quality trade that gives you, say, 10%. 10%, if you are trading a funded account, you make 10% profits of 400,000. That's about $40,000. So that is how powerful it is. So if you take a break, and in that break, you can also have time to visit your trade for the past few weeks or for the past few months, and can learn from your mistakes. And it is in that process of taking a break that you will now discover that, oh, there is this particular aspect of Forex that I do not understand. And that takes us to self-development. So you now start developing yourself. Do I need to understand more chart pattern? Do I need to work more on my risk management? Is in my psychology still the problem? Remember that psychology itself is about, we have psychology is, let's say, 80% of what we are doing. And it takes a lot of time. It takes experience to develop that psychology. So if all those things are put into perspective, just kind of develop yourself, say, okay, I need to develop myself now. And I need to learn what is the best time to trade this pair. I need to find out about, is this GJ my pair that I want to trade, or can I go and try gold? Then if I'm going to try gold, okay, let me give myself 2 weeks to understand gold movement, the time. And when you are checking movement of currencies, you are checking the time, the most important time, the Asian, the New York session, the London session, you are checking all those times. You are seeing how it moves. You are seeing, it's a lot of hard work, but it pays. You are also saying that during the news time, how this PS also moves. So all those things are very important. So if you have any question, Victor, let me know.
Okay, sir. Like, how do I read news? How do I read about news? Like,
Yeah, I sent out a website for news. Forex Factory is a very good one. You can use Forex Factory for news, and you can use my FX book. You can download the app to see what is going to happen with news. We take news in some other program. We'll talk about news. So I'll just do a private video to discuss more on news. So always check Forex. Remember, I always screenshot Forex, the news, like every week. For next week
yes.
now, we'll send that one maybe by tomorrow. So on Forex Factory, there is a way you can filter the news to high priority news. So those high priority news are important, and you have to be very careful of them. If it's Australian news and let's AUD news, you don't want to be trading AUD around that time. If it's USD news, you have to be careful of pairs that has to do with USD, either GBP, USD, or USD, whatever, USD CAD, Canadian dollar. You have to be careful during news. But the thing now is that US news affects almost all the currencies, because the whole world is like everybody's trading in US news. So it's always going to have an impact, even it will affect GJ as a currency. So yeah, that's how you find out about news. So I know that you've not been doing much of a prop firm account. What I do think is that to kind of do prop firm accounts, you need to do a lot of. Actually, I'll send the link to the group so that you can register and do a free test, with Forex account. It's free with FTMO, so that you can see the analysis. It's all free. I think you have to trade it within 10 days. I will send the link to the group so you can start from there. So, but the thing is that why you need both personal account and prop account. The thing now is when it comes to prop firm account, a lot of people, they will trade the account, they will just blow the account. A lot of things is going on, and some will actually pass the account, and then the prop firm will send it. There will be a message that they are no more trading again, and the prop firm is gone. I lost money to my Forex funded Forex funded or MFF, whatever they call them. I lost money with those people, and other ones also packed up. So it's good to have personal account. The reason why I'll say the personal account is good is because you can actually trade at free will. You are not bound by the prop firm account rules. So you can say, I want to risk 3%. I want to risk 20%. With prop firm account, you cannot risk 20%. So most of them maybe 4 or 5%. Once you are daily drawdown, 4 or 5%. After that, they will close the account. But you can have that freedom with your own personal account. You can be able to, with a small money, you can lose money, you can learn from, but the important thing is you are learning from your mistakes. So the prop firm account, again, will kind of put you into shape so that you can stick with rules. Imagine a world without rules, a world where everybody's just doing whatever they like. So it's important for someone to be able to follow the rules. So if you follow the rules or prop firm account, you pass it, then you'll be able to make money from it. So it is not necessary to prioritize prop firm over funded. I personally prefer funded, my own personal account than prop firm account, because if you're a very good trader, you can develop your money, you can compound, like I said previous webinars, you can compound your money to a certain amount, or as much as you want. Trade at your own will, trade anytime. There is no restriction. That is I prioritize personal account. But there are people that they still prefer prop firm account. But if you have a prop firm account, it's good you use prop firm account, and you can use that when you have a withdrawal, you can use that withdrawal, transfer some of that money back to your own account. So that is how you do it. Then you have other people. Sorry, my daughter just came in, just post this video.
Yes.
Sorry, everybody's excited today.
Mm-hmm.
So yeah, so with the prop firm account, you can once you pass it, if it's 10,000 account and you're making money, you are saving part of that money to buy your own to transfer that to the personal account. Then you can also buy more prop firm account. So in terms of portfolio development, prop firm account is very good, but it's always best advice for someone to be able to have both personal and prop firm account. Now, there'll be a time that trade is going really, really well for you, and you can be trading both. There'll be a time that trade is not it's not going well. Then you can now say, okay, I will leave prop firm accounts for now. Then I'll focus on my own personal account so that I can get myself back into the winning ways. Do you understand the difference now?
Yes, sir.
Yeah, so that is how it works. Because sometimes I have personal accounts and I have my prop firm. If I see that this trade, I'm not so sure, I would not want to take that trade on a prop firm account. I'll try it with my personal account. If my analysis is going well as planned, then I can now, with a little risk, then I can use my prop firm account. So that is how I work. But the problem is you need to protect your psychology, because when people are blowing accounts, it kind of brings them down. They start feeling bad. They start feeling like the world is coming to an end. No, it's not like that. The best thing is, if you find yourself in that situation, just forget about prop firm. Focus on your own money, but just go for little amount of money that you can afford. Because sometimes you are buying a $50,000 account with prop firm for about $300. You can as well trade that $300. You can even double it. You can even triple it. with your own risk management. So it's best that when you are back into winning ways, your winning ways and your psychology is back on track, then you can now say, let me go back to that Profem account and try it again. Because blowing account, Profem account, and it can be very painful. It's a very painful experience because you are almost at the verge of passing it. Look at, for example, now there was a news yesterday, and you are risking 2% of your account. Maybe that 2% is just the last 2% that for you to pass that account. And the next thing is you risk 2%, then the news came and then it took you out or something happened or whatever the story is, you now lost that account. Sometimes it's something very, very little. Then they will send you a message. They will tell you that you have lost your account. Then you have to go and buy again. They will even tell you that we'll give you 10%, reset your account. You are resetting the account. Every time you are paying money, that money that you are paying, it will help you psychologically more if you are actually using that money to trade your own personal account and then to be able to develop that account, compound it gradually. The good thing is, because it's your personal account, you can even make a withdrawal anytime. You can withdraw, you can say, this $300 now, it's now $450. Let me take my $300 and be playing around with the $150. Then you are doing it gradually like that. You will now discover that your personal psychology will be intact and will be stronger, and you will not feel let down. You will not feel like, oh, I'm a failure. Even when you can trade a little thing like that, a little heart bridge from a Profem account, it can ruin somebody's psychology. So that is the reason I always tell people, always have your own personal account to trade with. And when you are making that profit, make withdrawal. Even if it's $10 you want to withdraw it, go and enjoy that money. It feels good. Then you enjoy that money, you come back to trading. If you take 2 losses, you take time off the market, then you come back again. By then you would have relaxed, you would have learned from your mistakes. Remember, we talked about have a plan in place, learn to take a break. Maybe sometimes that's all you need. Maybe you've been spending too much time on on the screen. You just need to take time off. So you taking time off, it will really help you to go back and think about your trading journey and what happened, where was your mistakes. So at the end of the day, you are coming back stronger, and you are now analyzing better. Say, for example, let's see if I can bring this up. I'm trying to share an analysis quickly. Okay. You can see this now.
Yes, sir.
A second. Just bear with me, please. I'm trying to arrange this thing here. Okay, so you can see now that we have this pair here. This is our lovely pair. So if I took a loss here, because it's been an uptrend, and I've been doing what? I've been buying. Each time it comes, it came back here. I bought all the way. Maybe I took about, from here, I took about 50 pips or 40 pips. I was off the market. And then I waited till it came back to the trend line. I took another few pips. Say about, if I'm not being greedy, let's say 30 pips, I'm not being greedy, then I'm off the market. And I was expecting it to go up again. Then it touches here, even if we had a little bit of, what do you call it? We have bullish, a bullish candle here, looks like bullish. If you have entered somewhere here and you expect it to go up and it took you out, then I can come back and revisit this. I can now say, actually, I'm not even supposed to take this trade because we've been having rejection here. This is where you go back to your trade now. We've been having rejections and the price is not breaking. We have a box. You remember I was talking about box stop analysis. So we've been boxed up here for some time. It's been going up and down, up and down. As soon as it came out, it retested it, and then we had a drop. So these are the things that you learn from your mistakes. What I was referring to, you go back and learn from your mistakes. These are the things that you learn. So when you now find out this, you now put it in your trading journal that, okay, I see what happened. I entered the trade. It took me out. That's why I took that loss. But if that same mistakes happen 2, 3 times, the best thing to do is to just leave the market for that period. Take a break, take a week off. If you want to take a week off, go and do something else. If you have another job, go and do that job. Do something else you want to do. If you have anything you want to do, just go and do it as at that point. So that by the time you come back, you've learned from your mistakes, and then you're not coming back into the market. You are not revenge trading. You are not under pressure to trade. You are not saying, yes, I must catch this market. You're not saying that because I know for sure. There is nothing 100% for sure when it comes to Forex trading. We can only do our best. We can only follow our analysis and use our risk management. I think that being said,
Yes, sir.
if you have any question, let me know so we can. Any question?
Not really.
Okay.
I'm getting your teaching clearly.
Okay. No, those things are just, with experience, because as time goes on, you're beginning to learn, beginning to understand it gradually. I'll be sending out some ebook that will help, individuals in their journey. So, yeah, I think those things I've just discussed are the most important things. Most calls that I received, it's people blowing accounts and profit accounts, things like that. And people can be so down and unhappy with themselves, and they are good traders. It's just little things like take a break, discipline, self-development, because there is a reason why you are not making profit. The moment you can find out that reason, you now focus on that particular point. And when you are focusing on it at that period, don't even bother taking a trade. Take time off and come back stronger. That is how it is. It looks like everybody is expecting us to start at 10. Well, we are finished. Yeah, it's just going to be a very quick one because I'm having a very busy day today. Just a quick one. If no more question, I want to see what is going to happen to GJ next week, because this way it has been flying this week. The way it will crash, chai, that will be good money. I'm telling you, that will be good money. You can't not have a pair that is flying like this. Where is it again? Let me see. Where are you? Can you imagine, even when you go on a 1 hour time frame, look at it here. Look at it here. Let me share it with you. Yeah, look at it here. So if you go on a 4 hours time frame, always look for your 4 hours time frame, always. And you now have this. From here, after we've been making money from here, making money. I said the moment it breaks out from this box, which was what we had, it broke out from this box. The next thing started going up. And look at the number of pips. 500 pips. 500 pips within the space of about 2 days. Yeah, about 2 days. Started from here. Let's say even 3 days, from Tuesday or Wednesday, mostly on Wednesday. And there was no way of coming back, and got to this point. So my concern now is, if it's going to drop, a lot of people are still buying. If it's going to drop, it's just going to put everybody. Because when you look at this is just a quick analysis now. When you look at it, everything here on top of this moving average has been going up. It came back to retest it, came back to this region, went back again, came back to this region, came back again, and then it broke it. So it's still going to come back. and try to come back to this region. So we may be looking at something coming back to 192. It will be a massive drop. And when it will happen, it will be like a magic. But the moment you have a 4 hours time frame, on a 4 hour time frame, you have your bullish engulfing or bearish engulfing, then start looking towards that direction. So those are the things that you learn when you are making mistakes. You go back and revisit your trade. You now learn and found out that I've actually made a mistake. I was trading against the trend. So that is it. Any other question? So we can round up. No question. All right, Victor. Thanks for turning up. Anyone that comes after this now, I think till some other time. Let me see.
Thank you very much, sir.
All right, man. You take care. Have a good weekend. All right. Take care, man. Okay.
Thank you for your time.
Okay, Doc. All right. Take care. Bye-bye.
Bye-bye, sir.
Okay.